This is the origin of the trade on the weekly time frame. Now, this high here has been broken by this candle, closed above this high, then followed by this other candle, followed by this other candle that also closed above the high. Let me lock all this so they don't pop up on my screen. So followed by this candle that also closed above the high, giving us this fair value gap, giving us this fair value gap from this 1, 2, 3 candles. So with this gap now coming into this week, we're anticipating price to come into this gap, tap into this gap, then go up and take this high. Why this high? It is this high because there is no, this is a single candle here, so there is no resistance like this one here. A high hasn't been formed here like this bullish and bearish candle here on the weekly. So since we are taking it from the weekly fair value gap, we are aiming at this weekly high. Had it been there was something like this here, we'll be aiming at the closing price and opening price of that level. So in case you don't understand what the opening price and closing price is, I have a video on my channel. Go do yourself a favor and watch that video. So back to this trade. So we're targeting this high 159,456 from this fair value gap here. So we actually got everything we wanted. Now from this weekly, we go to the daily time frame. So we go to the daily time frame. So coming into the daily time frame, we have seen what we want. Now this came into that weekly time frame. Now this high, this level here, this bullish candle and this bearish candle formed a low or a support. So what we're basically thinking, or what we're basically looking for, is for the market to tap in here. Although there's a fair value gap here, you can take this. In fact, I took this as my red zone. So this is my red zone here, this fair value gap. If you look, you'll see this candle and this candle, they didn't close this space in between. So that was my red zone. So what it's going to be now is a case of knowing if this red zone is going to hold or not. So how do we know it's going to hold? It came in here, it came into that level here. After, pay attention to this part, after creating this candle on the daily. Now as it has created this candle on the daily, this candle and this candle have formed a support level. So this level becomes a strong level. As you can see, even after taking our stop loss, it's still pushing price back up, and I still anticipate price to get to this high. But that's not what we're talking about. So since it has created this level here on the daily, so what we're waiting for is the market to tap into that red zone, tap into the red zone, then come back to this support. If this support gives us if this support that has been formed on the daily gives us bullish signals, then we are going to take our trade. Now how do we know it is going to give us bullish signal? At this point, we go to the 4 hour. So now on the 4 hour, this is that level here. So on the 4 hour, it came down here back into that level after tapping into this red zone. Remember this red zone on the daily, tapped into this red zone, came down here into that daily support level that was formed by that bearish and bullish candle. So on the 4 hour, it has also given us a red zone. So this red zone here is this candle breaking this support here. So we just replicate the same thing, wait for the 1 hour to come in here and react, push up, then go to our target. So from this 4 hour red zone here, we go to the 1 hour to see what's up. So we're on the 1 hour now, and we go to that red zone. So you see the red zone here, although you can still repeat what you did on the daily, looking for the 4-hour to form a support, just like the daily formed the support, trading off of the daily red zone back into the daily support. So you can replicate the same thing, trading off of the 4-hour red zone back into the 4-hour support. So let's go back to the 4-hour and see if we have a support. I didn't even look at that. So yeah, on the 4-hour we have a support right here, but price did not come into it. So how then do you take the trade? There is another method. So the other method is waiting for the red zone to be disrespected. How does it get disrespected? Now after the price closes here, it traded back into this red zone. This red zone was supposed to push it down, but it pushed it down a bit, then came back up and closed above. Let me shift this a bit so that you see what I'm explaining. So price came into the red zone, traded back down, or let's use this one rather. Price came here, traded back down, and came back up and traded above that reaction off of this 4-hour red zone. This is how we know this red zone is not going to hold. Then I took my trade, put my entry, I set my stop loss, and it happened to be that I lost the trade. So reviewing the trade, I came to realize that this market was supposed to go. This is why I tell you guys that this COPs on this closing and opening price levels are really strong. Look at what happened here. See how price came to this daily COP. There are two of them here. This daily COP. Okay, I locked it. Price came to this daily COP, didn't close above it. This other one too. So price came here. You can see how strong price reacted off of this place just before my TP, off of this place. So what I was supposed to do was wait for this price to hit here, then come back down and take this support and see what we're going to get from this support. So I'm still framing my bias is still bullish because we have tapped the weekly is bullish, the daily is bullish, but we have tapped this place, this COP zone on the daily time frame, and gone back to take this low. So this low has not been closed below. So with this thing I'm seeing here, we're still going to go up, but that's not what we're talking about. This is just how the trade happened, and this is how I lost the trade on USDJPY. Thank you guys for watching, and I'll see you on the next video.